Salbert op saam met die sanger Jay. Ons ontmoet 'n 13-jarige skaapteeler. En Carmen gly deur die klowe saam met Liani May. Dis Pasella in Diamantwêreld, Vrydag aand 7:30 op SABC2 met 'n herhaling Sondagmiddag om 1.
Welcome back. You're still watching Morning Live here on SABC2. Now, the first quarter of 2016 saw consumer credit health at its lowest in 3 years. This is according to TransUnion's Consumer Credit Index, or CCI. The report indicated that worsening credit behavior is driven predominantly by rising credit defaults, which increased by 1.8% year on year. To unpack the report for us, in the studio we have TransUnion CEO, Geoff Miller. Mr. Miller, good morning to you and welcome to Morning Live.
Good morning. Thank you.
Thank you very much indeed for your time. Now, on Tuesday, we had a petrol price increase. Yes. We've also heard of credit rating downgrades. How are these microeconomic factors affecting South Africans in general?
Yeah, what we saw last quarter was really rising interest rates as well as inflation. So now we're importing maize, we're seeing food prices increase, and that led to your tagline that less consumers are able to pay their bills. And I think it's a combination of those consumers that have just taken out too much debt and those consumers that are now finding themselves struggling to meet their obligations, given that they're paying more to service their debt and given that they're paying more to eat on an everyday basis for electricity, transport, all of those types of things.
Now, the report also indicates that households with too much debts are now bearing the heavy burden of the increased interest rates as well by the Reserve Bank.
Yes, absolutely. So your mortgage bonds are going up. There was 75% basis point increase in the last quarter. And so people with mortgage bonds are paying more. Depending upon that bond, it could be a couple thousand rand a month. People with vehicle asset finance, so their auto loans are paying more. New consumers that are taking out credit are paying more. So rising interest rates are really impacting the cost of taking out debt.
But then in general, are South Africans actually tightening their seatbelts, especially when it comes to spending? I mean, I was looking at the opening of the Africa Mall earlier last week, and people were flocking the mall, and I was wondering are we really tightening our seatbelts?
Yeah, I think it's to be seen. I think retail sales have actually surprised the last couple of months. So, they thought they were going to soften, and they seem to be a bit robust. So it looks like consumers haven't started tightening their belts perhaps as much as they should, and that's why we're seeing these rising debt obligations, missing debt obligations. So we're going to have to watch it closely. If you are a consumer, I would certainly urge you to make sure that you look at your budget and your income, and don't purchase anything that you can't afford.
And anything that you do not need. But then at the same time, applications for debt counseling have also gone up.
Yeah, I don't have the figures offhand, but certainly when consumers find themselves in a situation where they can't pay their bills, they will go to debt counselors. Debt counselors will work with the lenders to try to put them on a repayment plan, to extend the terms, to try to ease that debt burden and put them in a place where they can afford both to pay their debt obligations as well as live on a day-to-day basis.
Now, in the first quarter, how many applications for credit did you scan, and how many were successful in this regard?
We don't release those exact figures, but what we have seen, certainly in the retail sector, is that applications have been going down, and I think there's a couple of reasons for that, as well as approval rates. So I think consumers are applying less. I also think retailers are marketing less, and I think there's new obligations around affordability and new obligations around documents that you need to take to a retailer when you're applying for credit, and we've seen that have a dramatic impact in terms of the number of applications as well as the number of approved applications, so that's fallen substantially.
Now on the screen now we have a few graphs on that generally show a steep downturn for consumers, but how was this report researched?
So we get our data from a number of sources. So TransUnion, we work with over 1,200 credit grantors across the country, and so we provide them with information that gives them affordability as well as an assessment around creditworthiness. So we're able to get data from that. We also get economic data. We've partnered with an economic research firm, ETM, and so we compile publicly available data as well as our proprietary data to develop the index.
Now, there are also new laws coming in place that will further hamper access to credit, especially from credit providers. Just tell us about these laws.
So 2 major things that have occurred. One was implemented last September, and basically that states in order for you to apply for credit, you need to provide a bank, a retailer, anyone that you're applying to, 3 months of either pay slips or bank statements, so proof of income. And so most consumers aren't carrying that around on a day-to-day basis, so that's adding a bit of a hassle. And it's also very prescriptive around affordability, so how much credit you can be granted. The second one is due to actually come into force this week, which is interest rate caps, interest and fee caps. And so it's actually limiting what lenders can charge to a consumer, both from an initiation fee as well as the overall interest rate. And so for some institutions, they're gonna have a big problem with that.
That's right. But is it going to be beneficial for the consumers?
I think the intent is right. I'm not sure that the execution and the implementation is necessarily going to give perhaps the benefit that is sought by the government.
But in general, the trend that we're seeing here in South Africa for the consumers in terms of spending, and as we're also talking about the increased credit defaults, is it likely to change anytime soon?
So we expect that defaults are going to continue to rise. We don't see inflation abating. We expect the Reserve Bank to raise interest rates further. And we don't see job creation, and we don't see real wage growth. So, you know, I don't want to sound like there's an impending disaster, but I don't think there's going to, you know, a big improvement. So we would think that things are going to be subdued. We think that economic conditions are going to be tough, and that we're going to see consumers more or less struggling to meet their obligations.
So the situation might stay the same, or it might even go for the worst.
Yeah, a little bit worse. I mean, once again, we don't see a dramatic increase, but we do see that consumers are going to continue to struggle to pay their bills.
Oh, well, that's where we're going to leave it this morning. Geoff Miller, thank you very much for your time.
Thanks so much.
There you have it. That's Geoff Miller. He is the CEO for TransUnion, talking about the state of consumer spending and credit default here in South Africa. We're taking a break. Money Life continues after the station.
When lots of fruit, vegetables and fibre aren't enough to ease my constipation, I trust Dulcolax tablets. I take Dulcolax for dependable overnight constipation relief, and in the morning, I'm back to myself. Dulcolax.
Imagine affordable car insurance with premiums that never increase. Now that could save you tens of thousands of rands over time. Well, you don't need to imagine anymore. With PMD, your car insurance premiums are fixed for life and guaranteed to never increase. If your current car insurer charges you 1,000 rand a month and increases your premium each year by just 10%, after 7 years, you'll be paying nearly double what you are today for exactly the same car. By comparison, a PMD policyholder also paying 1,000 rand a month today will have saved nearly 4,000 rand after 3 years, 13,000 rand after 5 years, and a massive 30,000 rand after 7 years. PMD covers you in the event of the total loss of your car through write-off in an accident, natural fire and disaster, or theft and hijacking. You also get third-party liability protection up to 500,000 rand. What's more, PMD protects you with growing cover for smaller accidents not resulting in write-off. Each month you pay your premium, your cover grows. The longer you pay, the more cover you enjoy, all the way up to the full trade value of your car. For car insurance with fixed premiums for life, SMS the word CAR to 43813 and we'll call you. That's CAR to 43813. PMD, fixed premiums for life.